June 12th, 2026, Elon Musk became the world's first verified trillionaire. $1 trillion. That's 1,000 billions. More money than most countries have. And you know what he did the very next day? He raised more capital. So, if the guy with $1 trillion is still raising money, what does that tell you about your business? Look, the SpaceX IPO was historic. The company went public with a valuation near $2 trillion, the largest IPO in human history. Even as the first person to cross the $1 trillion mark, Musk didn't stop raising capital. He didn't say, "Well, I've got enough now," because that's not how wealth works. That's not how growth works. And most small business owners completely miss this. They think raising capital is something you do when you're desperate, when you're out of cash, when you're backed into a corner. But the wealthiest operators on the planet, they raise capital when they're winning, when they have momentum. That's the mindset shift right there. Capital is fuel, not rescue. So why does someone worth over $1 trillion still raise capital? 3 reasons. Reason number 1, leverage. When you use other people's money, you preserve your own capital for other opportunities. Musk could self-fund every venture he touches, but he doesn't, because smart operators multiply their impact. Reason number 2, validation. When investors put money into your business, they're voting with their wallets. That validation signals to the market that you're worth backing. Even a trillionaire benefits from that stamp of approval. Reason number 3, velocity. Capital accelerates growth. You don't wait 5 years to save when you can raise it in 5 months. Speed wins, and capital buys speed. That's why Musk raised money before he was a trillionaire, and why he'll keep doing it. Now, you might be thinking, "Stephen, that's great for Elon, but I'm not running SpaceX. I'm running a small business. Who's going to invest in me?" Here's what changed everything. In 2012, the Jobs Act, Jumpstart Our Business Startups Act, opened the doors to capital raising for companies like yours. The Jobs Act said, no more gatekeepers. Now, everyday people can invest in your business, not just the wealthy. This opened up regulation crowdfunding, raise up to $5 million, and regulation A+, raise up to $75 million with advertising. Small businesses actually have advantages in today's capital landscape that billion-dollar companies don't. Advantage number 1, emotional connection. When someone invests in your business, they're investing in you. They know your story. Your customers can become investors. And when they do, they become evangelists because they're financially invested in your success. Advantage number 3, agility. You can move fast. You don't have a board of directors slowing you down. Investors love that. So who can actually invest? Short answer, almost anyone. Regular people with regular incomes can now participate. Under Regulation A+, you can advertise it. You can build momentum publicly. This isn't hush-hush anymore. So, what's the process? Step 1, you need a solid story and a clear plan for how you'll use the money. Step 2, you need clarity on how investors win. Transparency builds trust, and trust drives investment. Step 3, you need traction. Evidence that your business solves a real problem for real people. Step 4, choose your platform. Republic for tech, Start Engine for consumer brands, WeFunder for community businesses, and RealRise for capital strategy. Step 5, build your campaign. This is where storytelling matters. You're sharing vision, mission, and why this matters. Step 6, engage your community. Once you hit 40% of your goal, outside investors start paying attention. That's when it accelerates. Now, Let me tell you where most people screw this up. They wait too long. They wait until they're desperate. And by then, their leverage is gone. When you raise from strength, you get better terms and faster closes. Raise when you can, not when you must. That is the golden rule of capital. All right, let's bring it home. 3 things to lock in. Even a trillionaire raises capital because it's fuel. The Jobs Act leveled the playing field. And your community connection is an asset big companies can't replicate. If this shifted how you think about funding your business, do me a favor, hit that follow button and drop a comment. What's the biggest thing holding you back from raising capital? Let's talk about it. I read every comment, and I'll answer the most common questions in the next video. Now go build something great.